Good evening, everyone. I am Vaishnavi Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Kalana Ispat Limited. Today, we will provide a brief overview of Kalana Ispat Limited. Kalana Ispat Limited is primarily engaged in manufacturing of high quality mild steel billets and alloy steel billets across various grades. They also offer specialized steel processing services designed to meet client specific needs. The company operates in two key segments, sale of products and sale of services. From management team, we have Mr. Varghese Joseph, Managing Director. Good evening, Varghese sir. Welcome.
Evening.
Mr. Aftab Hussain, Executive Director. Good evening, Aftab sir. Welcome. And Mr. Anup Kumar Gupta, Director from Java Capital Services Private Limited. Good evening, Anup sir. Welcome.
Good evening. Hi, everyone.
So now I hand over to Varghese sir to give us more insights about the company and its future plans. Over to you, sir. Thank you.
Basically, I was in association with some people who are already in the steel line. And because of that friendship, so then that time I was also thinking of going for some trading activity. This my friends advised me this is a better line that you can choose it. So that was the you know beginning of my entry to the trading of steel line. Then after operating for 2 3 years, then I got a first company to join. And once we come together, then the trading is started taking off much better way. Then after working about almost 10 years in trading, so we used to go for the recovery and all for the place where we used to supply all these big steel plants. And from there I noticed, that if they can do it, then why don't we think of going for such a project? So that was the beginning of this thing. Then 2011, we started our first furnace, the name of MIT Iron Steel Private Limited. Then after working for 2 3 years, we formed this Kalana Ispat. Then the entire transaction, we bought in the Kalana Ispat. That was the beginning of it. Then in 2015, we started production in billets. We started with ingots. Then after 1 year, we shifted to billets. So that's where it all started. Anything else you want?
Some line disturbance, I think.
Hi, Vaishnavi. Are you there? Vaishnavi, are you there?
I think there's some disturbance in the line. I think.
So thank you, Mr. Varghese. I think you have given a good brief about your start.
Yes, sir. So we will start with the investor presentation.
Okay.
So, Mr. Aftab, I would request you to give a brief about your company.
Sir, Kalana Ispat, it is mainly into manufacturing of NS billets and alloy steel billets. And we also trade in iron and steel scrap, iron ore. And we have a very good solid customer base also. In and around our factory only, that is around 150 kilometers, we are able to sell our entire goods. And we are already always 15 to 20 days advance booked in orders. Orders has never been a problem. Sourcing of raw material has always been our USP. So we have always been able to source raw materials at a very good and cheap price because we are already we come from a trading background, sir. So we already have a good source in raw materials, and finished product marketing has never been an issue for us. So it is good. We are doing good, and we hope to progress more.
Yes, Mr. Aftab, I think you have given an idea about to the business. So let me take over it from you that, guys, the Kalana Ispat Limited is the company that company is in the manufacturing of blades, MS blades and
Village.
alloy blades, and that raw material that they produce, that is the basic raw material for the all steel industry for manufacturing of TMT bar and others materials. So basically, the Kalana is established in the Gujarat state, and they have a melting capacity of somewhere around 38,000 metric tons and the casting capacity of 30,000 metric tons. So they are well placed as well as they are surrounded by the various industries around. So the availability of the raw material and the sale of the goods from as produced by the Kalana is very easy because all around are the automotive industries and a lot of engineering industry are there. So the basic raw material is the iron ore and the recycled iron that is available. Plenty of that material is there. So they are easy to get and also easy to sell that material, their finished product to the manufacturer of TMT bar. So strategically, if I say that it is a good place of the business, and as well as because they have a vast experience, Mr. Burgess has a vast experience in the manufacturing of steel and trading of the steel since so long of time. So it is a well experience with the legacy of Mr. Burgess in the financial terms, if I talk about to this, the company was started in 10 years back and now they are coming up with the IPO. So for the financial key factors, I would like to highlight. Can you pass on this next slide too? Yes. So 10 years experience they have, they are certified by the ISO 2030, 2830 and 2012. And they having, as I told you, they having a melting capacity of 38,000 metric tons. At presently, they are using 62.81% of the capacity. And because that the low production capacity is due to the restriction on the use of the power. So they are using they are running their plant on the night shift only. So that's why the major reason is that they would like to be run the plant on the day shift when they will have a surplus power by way of the IPO. That I will discuss later on the next slide. But CCM casting capacity also they are having 30,000 metric tons, and at presently they are using 82.65% capacity. They have achieved a turnover of 73.72 crores during the financial year 20,000 to 23-24 and also earned the EBITDA of 3 crore 65 lakh and the net margin PAT is 2.2 crore 36 lakh. So financially, they are giving the good return from their capital employed. The ROE is 31.12% and ROCE 21.20%. Because the business is good and they are having a capability to build a more business by the same capacity and same facility. So it's a the forward overlook is good for the company. May I have on the next slide? Yeah, it is a journey of the company. So let me introduce to this. They started in October 2012 by business incorporating the company of Kalana Ispat Private Limited. Then initially they set up the factory for manufacturing of MS ignore, but later on they also converted this MS ignore to the alloy ignotes and they started manufacturing and composing the material by making the different grade of the steels according to the requirement of the customer. And in July 2015, they obtained the IC certificate also. So they started to import some raw material and also foresee the market of overseas in the down the time. But it is the demand is there, so they don't have a significant export right now. But definitely they have a capability to export the goods in upcoming time period. Installed capacities of caster they installed in August 2015 and July they obtained the goods and GST registration and started obtain the production and sale operations in 2017 and obtained the MSME registration license in 2018 as per the requirement. So it's all journey in the general business. and that this business is built up by Mr. Burgess by their experience, and the Mr. Aptab has joined this business as a experienced younger generation. So it's a best combination of the experience and energy. So both of the promoters are very energetic, and I especially thanks to Mr. Aptab, I have been dealt with him the so long period of time during this IPO process. He is very energetic. Next slide, please. So if I put it on the financial highlights, so if you will see that the company having a turnover in 57.93 crores in the year, right, financial year 2020, but they also achieved the target of next year financial year ended on 23 83.35 crores. And again, they have achieved a target of financial year 24 73.94 crores. Definitely, it is a little bit dip, but indirectly, if I say there was a price was upward trend in the financial year 2022-23, so they got the opportunity of trading activities and they booked the trading activities turnover in the financial year 2023. But as soon as the price has slashed down, they change their strategy to come restricted to the manufacturing facility. That's why the reason of the turnover, there is a slightly dip in the turnover compared to last year. But if we see the EBITDA margins, it is significantly higher than the last year's. The reason is that they have eliminated the trade-in turnover and focus on the manufacturing turnovers. So on the EBITDA side and PAT side, they are having the improving term, and they have got the very significant value of the EBITDA in the last financial year. The reason of that improvement, higher improvement, is the three major factor. One major factor is that they have focused on the manufacturing side rather than to the trading side. So they are gaining on the higher margin in the manufacturing activity, and also they have focused on the higher grade of the quality. So by using the higher grade of the quality, they are able to make the higher grade of the Dignet. So that is, they have a better margin compared to the last years. Also, they have been improved on the burning loss side, because generally in the recycling process there is huge cost impact is come on the burning loss. So they have improved in that side also. So overall, all the three factors are factored in to improve the profitability of the company. And going the downward time also, it will gain again and again, because they have a spare capacity to improve the productivity as well as to save the cost effective as by using their capex into the solar power system. That I will explain you later. Can you go to the next slide? If I say the ratio, the key ratio is the debt equity ratio. So it is improved. In the financial, it was 4.02. Sorry, ROE. ROE, it was 4.02. Then it's improved 12.05. At present, in financial year 24 is 31.12. The best factor is the improvement in the profitability. That is the one factor. Secondly, they have utilized the better resources. What the capital they have been used for the production or business, that is being better utilized. So this is the key factor to improving the ROE and ROCE. Both the ratios are linked to the capital utilization. So they have reflecting that they have utilized their capital in the better way compared to year basis. If we see the debt equity ratio, that significantly gone down, because they have infused the capital as well as by way of the earning, their NOF has increased. So that impacted to the reduce the capital. Although they have a working capital facility that is going to be continued, but they would like to be remain very low debt equity ratio. Inventory turnover ratio also has been improved if compared to the 2022 to 23 and 22 to 24, because their turnover has increased and they have better utilized their inventory management, and also they have focused on the manufacturing side, which have a less compared to trading side, less raw material consumption compared to trading side. So these all are the factors that are improving terms. Company looking forward for the better always. Next slide, please. So if you see the current ratio, that is also improved lot, because better utilization of the resources in the working capital management. So they are focusing to improve the business day by day, and it is reflecting from the past trend also. If we see the financial year 2022, it was 1.03. In 2023, it was 1.07, and the financial last financial it is 1.99. And earning per share also being increased. Reason is that in the financial year 2024, it is decreased reason because of the capitalization. So they have built up the capital structure to increase their shareholding base for coming up the IPO. That's the reason. But in overall, down the line, when the post-issue capital will come and the effect of the capital improvement will reflect into the financial, it will improve compared to year basis. If I say the total assets turnover ratio, that is also improving term. So they have utilized turnover by utilizing the capital assets. That compared to 4.56 to 5.13, and in the financial year, because little bit dip in the turnover due to the eliminating the trading activity and focusing on the manufacturing side. So that's why the turnover ratio is little bit dip, but it is giving the strength to the profitability as well as to companies base for manufacturing. Net assets value per share is decreased because net assets value per share because of the capitalization of their bonus and reserve. The base of the capital is increased. That's why it has come down on the financial year 23-24. Next slide, please. So cash flow highlight. I would like to make that because company is making an investment in the resources and improving the turnover. So operation side they are investing into the business, and but other side investing side they are improving and bringing the cash flow, and net cash flow is the financial year 24 is minus 28.22 and financial 23 is 57.13 and 22 is 12. So it's reflecting that the company is making an investment day by day to make improve the productivity as well as by business. Next slide, please. So this is the management of the company. So Mr. Burgess is the managing director of the company. He's having a 40 years experience in the business, in the steel industry. He has a very significant experience on the steel and composition of the mild steel and the alloy steel. So he's very much experienced, and the company is getting the benefit of their his experience to resulting into the better performance and good quality of the product. Mr. Aptab is also executive director of the company. He's having 25 plus years experience. He's very good in the business terms and relationship, customer relationship, and he's very sound about to the decision making. He take a good decisions making, so that will also reflecting to the business and companies getting benefit from their experience. And Mr. Manoj Pillai, unfortunately, he is not right now in our this road show, but because of his business, so Mr. Mishra Pillai is a 25 years experience. He's controlling all the financial side of the company. Next slide, please. So it is the product pictures. So Mr. Aptab, can you explain it?
Yes, sir. These are the pictures of MS steel billets and alloy steel billets, which we make in different grades and sizes. So in MS billets, we make sizes from 100 by 100, 120 by 120, and 160 by 160. And in alloy steels, we make only the sizes 100 by 100.
So basically, what I understand from the business side, from Mr. Aptab also, let me explain you that MS plate is normal MS blades, the mild steel plates that is being used for the MS grade, and the alloy steel is the different kind of the steels that is made to
Yes.
order on the composition side. So they use the different grade of the alloys to make these blades, and this is being used for customized basis also. If I am not wrong, the alloy steel has a better margin compared to MS plates, and the company
Yes.
is focusing on the alloy plates majorly. Am I right, Mr. Aptab?
And we are soon we are going to shift to only alloy steel billets, sir.
Yes,
We are
yes,
doing a lot of R&D and research on that, and
yes,
soon we'll
yes.
be able to do only alloy steel in our
Yeah.
business.
So why manufacturing focus on the alloy steel, company will get the better returns and better margins compared to the MS blades. So they are focusing on alloy steel going forward. Next. Or it is talk about to the little bit literature about to the MS blades. So guys, this is the MS blades is the product made by melting the casting into the mixed MS blade scrap, sponge iron and silicon. Then it converted into the billets, which is being used for the various into the bars and wires, rods and the sheet metal. And this is the because billets is the basic raw material for the all industries to make the rods, bar, seats, etc. Next. Similarly, alloy steel, the difference between the MS blades and the alloy steel is that the composition of the material. So in the alloy steel, they mix the different grade of the composition, sometimes EN or sometimes alloy, sometimes aluminum grade materials. So that give the better quality and the mild compared to mild steel. So it is the customized according to the market requirement and sometimes the customer requirement they give the composition and they make to order according to the customer requirement and they get the better margin because when we are making the composition for the according to the customer then they get the better margin in this product also. Next slide. So basically, whole the Kalana Ispat business is being divided into the two parts. One is the sale of the product, and second is the sale of the services. So as I told you and explained you that they are manufacturing of the MS blade and alloy blades, and they are selling, manufacturing and selling to the customers, and they reflecting into the turnover and the profitability is reflecting to the according to the their business terms and terms. And the other side, the company have a spare capacity of the casting. So what they are doing, because they are running the factory on the night shift only at present moment of time due to the restriction of the power and the costing of the power.
I guess there's some technical issue with Anup sir. Aftab sir, can you take over?
Yeah, ma'am. So, as Anup sir said, that uh, our business is divided into two parts. One is sale of products and sale of services. In sale of products, we make billets of MS and alloy steels. And we also indulge in a little bit of trading activities in iron scrap and other products also. And in sale of services, we use the spare capacity of our caster to do casting for others. So that is how we try to utilize our caster at full capacity. It is right now around 80% we have utilizing the capacity.
Okay. Next slide.
Anup sir will be able to. We'll need Anup sir to join on this.
Yes, sir.
Yeah.
Let's see if he joins, or else we can move to question and answers. Aftab sir, in the meanwhile, sir join, can you explain us about the industry?
The operational part?
You mean about the operational part?
Yes.
Yes. So, as we have told you that we are basically manufacturing MS and alloy steel billets. Alloy steel billets are mostly made to order kind of material, and MS billets are the kind that is used for construction activities, uh, for making round bars, for making angles, channels, and all other various steel products. Alloy steels billet will be mostly used by automobile manufacturers or who do other kind of forging activities. Right now, mostly we manufacture only MS billets, but soon we'll be diverting more towards the alloy steel side.
Okay. Thank
Hope
you,
sir has
Aftab.
joined, so I think.
Anup sir, can you please take over?
Yeah, yeah. Sorry. Due to the internet connectivity, I dropped out. So I am again in. So I was on that slide. Can we continue from there?
Sure.
Again, there is some internet issue.
Anup sir, are you there? I guess there's some problem with his network. Can we move to the question and answer section, sir? Once he's back, we can take the highlights and about the business again.
Okay, thank you.
Okay, thank you. I request all the participants to post their questions in the comment box. First question is from Aditi Menon. Please explain your business model.
Ma'am, our business model is mainly manufacturing of billets and through by using MS scrap and iron ore. And what we are right now trying to add to it is that we are trying to add a solar power plant to it, so we can reduce on our power cost and we have a better margins.
Okay. Next question. Arav Banerjee. What is our raw material, raw iron ore scrap?
We use both. We use both iron ore also and iron ore scrap also.
Okay. Next question. Ajay Gupta. Who are your competitors?
Uh, our competitors are mainly secondary steel manufacturers in Ahmedabad or in Gujarat.
Okay.
Like, yeah.
Hi, Anup sir.
Hi. Sorry. Due to that
Sir, your voice is breaking. Anup sir, we can't hear you.
can
Hello.
you hear me?
Yes, now we can hear you.
Yeah. So yes, we can continue now because due to the internet, I got disturbed.
Yes,
Yeah.
sir, no problem. Let's start from here.
So investment rationals. I would like to explain you about to the investment rationals. The company in India, there are a significant growth down the period of time, and as our government is focusing on the industrialization and the more focus on the business side, so always when there are the infra development or there are any industry development or the commercial and manufacturing side, there is a huge demand of the steels is created. So rapid growth in the global steel demands, India's expanding production capacity also will have a significant opportunity to cater those demands internally in India also as well as the global market also. So India is growing, definitely demand of the steel will come up very huge. So in that terms, Kalana will have an opportunity to gain the more business by expanding in the terms of production capacity increment as well as to have a overlook on the capital investment. Profitability also because the company is going to be installed the solar plant. So company is going to install the solar plant. They are going to be definitely guaranteed benefit from the power cost because presently the major cost of the furnace is the power cost. So company has decided to make a capital investment into the solar plant so that the captive consumption of the power is drastically reduction in the power cost. So in financial terms, the profitability is going to be increased by 3.5 crores next year when the full flash power plant will be installed and company will start operating on the power solar power. By the solar power, the company also gain the something extra, that is the spare capacity of the production. Because when they have a solar power, they will have a capability to increase the production by day shift also, which is slightly costlier in terms of the night shift. But when they have a captive consumption of power in house, then they will be sustainable about to the costing part also. Experienced leadership is there, so it is also a good because Mr. Varghese has a vast experience in the steel line. So the experienced team is there, and company will grow. Definitely will have a benefit of their experience. Strategic location advantage. I told you in the initially that they are established in the Gujarat state, which is very industrialized state, and they are surrounded by the very industries. So even the automotive industries, steel industry, infra, everything is there. So they will gain the advantage on the location side also. As they are also gaining because availability of the raw material and the customer is there. So they are gaining. But when they will increase the production, they will gain the more advantage. Improving profitability is the target of the company. That's why they are focusing on the manufacturing side and making an investment in the capital part because the major part of the IPO is going to be invested into the capital side. So that will give the boost into the profitability definitely by reduction in the power cost as well as by putting the forward integration of the rolling mill. That will give the advantage by improving the margin that at presently by selling the raw material they will improve by selling the ultimate material to the customer. Although that plant is going to be take time, but in the going forward time, it will give the margins, profitable, better margins to company. Next slide. Yeah. So I would like to put on the issue highlight what the company is coming up. So company is coming up with the IPO size of 32.59 crore by issuing the 49 lakh 38,000 equity share by diluting the somewhere around 37% equity, and they are gaining to be have this capex this value and going to be use this value into the capex side also. So that allocation of the issue is lot 66 rupees per equity share and the lot and out of this total equity, the market maker share is 248,000 equity share reserved for the market making, and rest of the allocation is being done the 50-50%. So HNI quota and retail
I guess we lost him again. Anup sir, can you hear us? Let's wait for a minute and if he joins. Aftab sir and Varghese sir, so sorry. Anup sir is trying to join again. Let's wait for him.
Yes.
Sorry, guys. Again. So I was putting on the issue highlights. So out of that, 81 lakh 1,000 was the pre-issue, and the post-issue it will be 100 1 crore 38 lakh 30 lakhs 39,180 equity shares. The post-issue capitalization market cap will be 86.06 crores. Next slide. Vaishnavi, can you put the next slide?
Yes, sir. Next slide, please. Anup sir, can you see the next slide?
So yeah. So if I talk about to the object of the issue, I told you that the company is going to be invested out of the 32.59 crore. The total capital is going to be invested in 1 crore 30 lakh 39,180 equity shares. So post issue capitalization market cap will be 86.06 crores. Next slide.
86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. 86. Some net issue.
Yes, let's move back to the questions. From Mr. Rahil, what proportion of revenue is now from manufacturing and trading?
We need.
Or if it is disconnected, then you can please take up.
Anup sir, um, Anup sir, can you hear us? Sir, please take over. I guess he has some serious network issues.
So, should we go back to the slide, ma'am? Are you?
No, we can take questions.
So I need
You want
for
to go
certain
back to
questions.
the
Yeah,
Okay, yes, we
for
can
certain
go for
questions,
Yes,
we
I
need
am.
an answer.
Right. Next question, please. Lakshman Dubai. Why diversification to solar setup?
Because solar will save us a lot in electricity bills. Right now, we are paying around 6 to 6.5 rupees per unit in power cost. But after installation of solar, it will come down to 2 rupees per unit. So it saves us in a huge margin. And that is why the decision for solar. And of course, it is our responsibility to go green also. So,
Okay. Can we move? Dia Patel. What is our working capital cycle?
our working capital cycle currently is around 30 to 40 days. From procurement of scrap material to other raw materials to our finished goods in the entire cycle.
Okay. Next question, please. Jay Bakshi. What is our sourcing arrangement with our suppliers?
See, all our suppliers are mostly with us since I think around 9 to 10 years. And as we told you earlier, that we were also in this business only of trading, and we still do a lot of trading activities in our company only. So, sourcing of scrap material has never been an issue for us.
Okay. Next question. Jatin Mehta. Do we supply through tenders or we receive orders directly from our clients?
All our business is B2B only. We don't entertain dealers or clients.
Alright. Next question. Raj Gandhi. What will be our rolling mill capacity?
So our rolling mill capacity will be around 2,500 metric ton per month, and the spare capacity will be utilizing for doing job work for others. Like right now in Kalana Ispat, we'll be making around 1,500 tons, and the remaining 1,000 tons will be utilizing for job work of other companies or other manufacturers.
Okay. Next question. Ishan Desai. What is our current power cost?
It comes to around almost 6.5 to 6.8 rupees per unit.
Okay. Next question. Anurag Shah. Given that the company also trades in goods such as iron scrap and iron ore, how do you manage the risk related to price volatility and raw materials?
See, we are already sold always 15 days in advance, and most of our procurements is right now from the domestic route only. So we don't have such huge amount of stocks, and the price volatility does not affect us much also. Because if we used to earlier we used to import raw materials from other countries, in that there used to be a huge risk of price volatility, but not as we now do it from domestic only. So there's no such risk, major risk.
Next. Okay, sir. Next question, please. Ishan Desai. What are our strategies to improve profit margins? Are we looking for value-added products or forward integration to improve our realization?
The profit margins will
So,
definitely increase.
yeah, let me give you the answer of this question because the profit margins will be improved by making because the company is going to be make an investment in the capex side of the solar plant. So they are going to gain the benefit of power cost. So that will reflect into the profitability directly, as well as they are going to the rolling mill. So that profitability will improve because for the rolling mill, the raw material will be their manufacturing goods right now, and when they will convert it into the TMT bar and the rods, that they will gain the profitability on that one also. So going forward, the benefit of power cost from the solar, it is guaranteed by the service provider or the agency to whom they are going to be placed the order. So that will reflect into the profitability 100%, and then rolling mill business profitability also will add on. So going forward, it will improve definitely.
Okay. Next question. Samar Dalal. Will solar power generated be captively consumed or sold to grid?
So it
Yes,
will be
all
the
will be
captive
consumed
consumption.
actively only. It is all captive consumption.
Next question. Bhavin Gar. Our current capacity is 38,000 MT with capacity utilization of 62%. Then why are we expanding our capacities and when can we see optimum utilization of our current facilities?
So the capex is not going to be put for the production capacity. It is going to be put the solar power. So that is a cost reduction exercise. And because we know that when we will have a lower cost power, then we can increase the productivity. That is the spare capacity. So both way we will gain by reduction in the capital, by reduction in the cost of the power, as well as when we will have a low cost power, then we will increase the our productivity in the day shift also. So if you will see our expansion is not for the production, it is cost reduction by way of solar power.
Okay. Next question. Harsha Joshi. When can we see our profit margin improving and what is sustainable OPM post expansion and commencement of new capacities? Anup sir, are you there? Next question. Rahil S. What kind of growth CAGR company is targeting over next 2 to 3 years?
After we commence, our solar plant gets commenced, and our rolling mills also comes into full production. Uh, I, I think we and all the alloy steel sizes that we are going to implement, they also come into production. We see the next 2 3 years to be very good. In terms, we can say almost 30 to 40%. We can say the company will grow.
All right. Next question. Jai Bakshi. What is our future capex plans for next 3 to 5 years?
As it is mentioned that the IPO proceeds will be going for the solar plant and the rolling mill, and after that we plan to put one more 4 megawatt solar plant, so we can utilize more power at cheaper cost and increase our production capacity in the furnace only.
Next question. Bhavin Gar. Thank you. Best wishes for your IPO. Anand Mittal. Thank you for this. All the best.
Thank you.
Sir, I guess we have covered majority of questions. Thank you
Thank
everyone.
you.
Thank you,
Thank you.
Lagesh sir, and thank you, Aftaf sir. Have a good day.
Thank you.